Tesla's stock just jumped almost 7% in a day. But here's the twist. They also canceled the key Cybertruck feature. It's something customers already paid for. So, why are investors so happy? What does this mean for Tesla's future? Let's break it all down. Welcome to Shift Path. Let's talk Tesla, Cybertruck, and the stock market. Tesla just killed off the Cybertruck's range extender. It was a removable battery pack. It added more miles for long trips. Buyers paid $2,000 for it in advance. Now it's cancelled, and Tesla's giving refunds. This is a big deal. Tesla once said the Cybertruck would get 500 miles of range. That was for the top tri-motor version. But in reality, it gets just 320 miles. And it now costs over $100,000. That's a $30,000 price hike for less range. The mid-tier dual-motor version, it was supposed to be $50,000 with 300 miles of range. Now it's $80,000, with just a bit more range than promised. So, why cancel the range extender? Tesla says it took up too much space, about 30% of the truck bed, and it wasn't easy to install. You needed a Tesla service center. Basically, it was expensive and not worth the effort. Even with this Cybertruck news, Tesla stock soared. TSLA closed Monday up 6.7%, hitting $318.80. That pushed Tesla back over a $1 trillion market cap. So, what caused the surge? It wasn't Cybertruck. It was about China. The US and China just made a new trade deal. They're cutting tariffs on electric cars. Tesla makes and sells a lot of EVs in China. So, this is great news for their profits. Also, the entire stock market went up. The S&P 500 and Dow jumped too. Investors felt more confident, and Tesla was part of the wave. 2025 has been up and down for Tesla. Early in the year, Tesla fell to $250. Then it climbed all the way to $480. This happened after the US election. Investors thought a second Trump term could help Tesla. Musk has strong ties with the GOP. But then, things got rocky. Tesla missed delivery targets. Cybertruck delays continued, and more questions came up about Tesla's future. Now, after this week's bounce, Tesla is still down 15% for the year. The hype is real, but so is the pressure. Wall Street can't agree on Tesla right now. Some analysts are bullish. Some say, not so fast. Cantor Fitzgerald likes Tesla. They say buy, and give it a $355 price target, even with sales dropping in Europe by over 60% in places like the UK and Sweden. They believe in Tesla's long-term plans. Goldman Sachs? Not so sure, they say. Hold, with a price target of just $235. That's a big difference. Some see Tesla as the future. Others worry it's losing its edge. What's next for Tesla? Two big things: India and Robotaxi. Tesla is working on plans for India. They want to open a factory in Maharashtra. It won't be a full plant, more like assembly. They'll import parts and build cars there. This helps cut costs and avoid taxes. If all goes well, Tesla cars could hit Indian roads by 2026. Then there's the Robotaxi project. Musk says it's coming soon, but we've heard that before. Still, if Tesla can lead in self-driving cars, it could be huge. But that's a big if. And Tesla needs to prove it can deliver. So, Tesla canceled a big Cybertruck feature. Investors don't seem to care, at least not today. But questions remain. Can Tesla keep promises? Can they deliver at scale? Will the next big thing be a hit? Or just hype? The stock's up, but the pressure's on. This is Shift Path. If you enjoy smart auto news with zero fluff, hit like, subscribe, and turn on the bell. What do you think? Is Tesla still a good bet? Let us know in the comments. See you in the next one.